Alright guys, so I had time today. I felt like doing a breakdown on SPY or SPX. Today's Sunday, 10:30, April 3rd. So let's go ahead and look at SPX and QQQ. So in my Discord on the 13th, where is it? Just had it open. Alright, yeah, so March 13th. I was expecting at some point to test around 45.75, and we did. And then you can see this is a series of when I was expecting it. So you can see I said study how previous move or the image on how RSI breakup precedes the move. So we got the move to 45.75, and from now we can. And I said let's be cautious here. So it's in danger zone because of fib. The fib was at 618 and 76.4, and that's where algos love to take profit or retrace. So let's look at it here. So we had a nice. What was preceding the move was at this RSI breakout, and then we also had bull divergence. So lower lows, higher lows, and we got the bounce. So let's go over the bearish count first. So initially I was very bearish because where is it? So everyone had this. They had the correction starting from here into some kind of expanded flat pattern, and I didn't like that because one, it was taking way too much time, and two, it was hitting a very long C wave or a 2618 extension, and I feel like anything longer than that, it's most likely an impulse and not a correction. And you can see the time. So time is very important in my analysis. I think that all corrections 2 and 4, that is, they should be paired together, so they're roughly around the same amount of time. So this is the supposed wave 2 at 42 bars, and this is the supposed wave 4, which is 91 bars. That looks kind of ridiculous. It's more than two times the correction length. So that's why I was very macro bearish. And while I'm more neutral now, I'm not sure where it's gonna go. I think now it looks better for the bulls, just because here, let's say this is the top. Here, this looks like a better pair. So 42 bars and 51 bars. So that looks better. Let's do this. So now that we're at the 764, this is the max pain level. I would not be long here. I would be sitting cash or taking some profit or having stop losses. I think at least at minimum we're gonna test 43.79, and then that'll be the bear case. So this is the ABC. So this is the leading dag, 1, 2, 3, 4, 5, or it can be 1, 2, 3, 4, 5, ABC up for 2, or we can even do something like this, and then just drag it out longer. We won't know until it happens. And then that's where we start dying. That would be the bear case. And then what would confirm this is that if we touch right here, so this is red line, if you touch that, then it's confirmed bear. Let's look at it on a cleaner chart. Yeah, so this is my full count. I don't want to spend too much time going the lower time degrees or time frames. So this is definitely the 1 in my book. This is the 1, that's the 2. And then 3 ends here, 4 and 5. And I know it's an ugly 5. You can do it's so bad. It's not bad, it's just very ugly, right? But it's valid. so it does fit. Okay, so a smaller time frame. Yeah, you can fit it 1, 2, 3, 4, 5. So that's the full count, and then like I said before, this wave 1 or A was the leading dag. Now this is a 2 or B, and then now we're gonna just capitulate. Confirmations right here. Let me add that to my object tree. Where is it? It's this one. Nope, nope. Here. Which one is this? I can go bear count too. There, okay. So yeah. So that's the bear count. The problem with this count is that the wave 1 and 2 and wave 3 and 4, actually, it's fine. Yeah, it's fine. Some of the weakness that we were seeing was this triple bearish divergence. Or I guess not triple, it would be double. It's just 2, so it's just regular. So that was some of the weakness that we saw, and then the confirmation for me at least was when this, so right here, when that RSI support broke, that's when it had a flush. Okay, so that's the bear case. Just remember that the confirmation is this red line for a bear market / recession. Now that we talked about the bear case, let me make sure I don't want to miss anything. If you want to get some more details on the macro level, you can see the other video I posted earlier. I think it was in March or late February, early March, on why I thought it was very macro bearish. And you can also use this too, where it's RSI support broke on a higher time frame, and it plays out nice. But now that we covered the bear case, let's go over the bull case. So make this invisible. Let's go to bull. All right, so it's very similar. This is the 1-2 primary degree, 1-2 intermediate degree, 3, 4, and then this 1-2, 1, 2, 3, 4, 5 to finish 3, and now we finished 4, and this looks a lot better now because this is 23 bars, that's 20 bars, so it's nice. Let's look at the subdivision. I'm not sure yet what it is, because I'm not. This was a 1, 2, 3, 4, 5 A, B, and then 1, 2, 3, 4, 5 C. So you can say that's A, B, and C. And then this is 1, 2, 3, 4, 5. It could be that, and then this would be your invalidation. Or, so let me just write it down. So it'd be like, or let me illustrate it. So it'd be like this. We just cannot touch this yet. Or it can be, you can also put this as WXY. It's just hard to label the correction. It's just so like ugly. Let's just say maybe it's, I don't know, it's maybe you can put it, say ABCW ABCX, or maybe even WXYX here, and then it ends here somehow, so maybe like that. So let's just say for the sake of argument it does end here, the correction, and we put in a 1, 2, 3, 4, 5, and this is a 1, and now we're working on 2, 3, 4, and 5. So something like this. This has to be intermediate degree. So yeah, this can be So this can be one of the scenarios, right? I think that if we are bullish, the correction has to be done right now, because any longer, it just wouldn't look right. That's my view. And we did break out on RSI. So as soon as we broke out, that's a good thing for bulls. If you come down to retest, let's say like we're coming down for wave 2, then look for RSI to back test this broken trend line. So I will look at something like in this box, so around 44 to 38, and then you want to look at fibs, anything around 0.5 and 618. That's the golden pocket. That's also where the 244 DMA is, daily EMA. And then so I guess 43.75 is what you want to have. And I mean, just for your future reference, have it labeled on your charts too if you like having my levels. So I will look at something like this. And I think, I mean, it just looks like it's a magnet. So let's say we get something like this. ABC, a minute degree, wave 2. Then we kind of print a nice inverted head and shoulders, and then we keep going. At this point right here, everyone's gonna get very bearish, calling for another bear market. And right now, like I'm not sure. So my stance is I don't know. I'm neutral, but if we do get around here, everyone's gonna get very pessimistic and calling for new lows. And then what always happens at local lows is that they'll make it super choppy, and eventually it'll just just grind up super choppy. So just remember that you're gonna see not black swan, but like FUD everywhere and stuff like that. So let's say we're bullish. What can we target? If we're bullish, let me delete this for now. Clean up the chart. If we're bullish for wave, whoa, what the heck? Why does it? Whoa, what the? Y'all see that? How does it change it? Messing up my damn chart. All right. Anyways, so if we're bullish, let's say, man, what the? Is this what the log? Oh, what the heck? Okay. This would be a target 55. For now, let's just keep it to this. Let's use the inverted fib for here. And yeah, that looks like it's. Let's get some log. That's good enough. So, primary wave 5 targets to me. This would be the conservative if we're bullish. I just want to stress that again. This would be, I guess, in the middle of the road, and then this is the super optimistic. So, I would target something like this. So it would look like, I don't know, like this, and then bang, bang, bang. Maybe it's intermediate degree like that. Yeah, something like that. And it would take us probably to the end of, maybe even to the end of 2023, something like that. I mean, just look at how long this lasted. Well, we just have to wait and see, but those are my thoughts on SPY/SPX. Basically, if bullish, we will, even if bearish, either case, I'm looking for a retrace to 43.75. Right, is that it? Yeah, 43.75. That's a bullish case. And then just to retouch on the bear case, if bearish, look for this to just capitulate, and then this is like the head and shoulders right now, and then bleep boop boop boop, and it dies. But yeah, we won't know until it happens. I just think that we have a high chance of seeing 43.75 or near 200 point drawdown. All right, and now let's go over the NASDAQ NQ. Let's do the bear case as well. So maybe one theory I had was that maybe Tech did top out, or NQ, and SPY didn't, but I'm not entirely sure. And one thing to know is that both cryptos and financial markets usually are in sync. They move together. So I would say if one is bullish, the other is most likely in the same cycle. So yeah, this is NASDAQ. So that's a 1-2, and then this is another 1-2, and then 1 2 3 4 5 3 4 5 3 4 5, and then what I don't know is this the tip? That sounds kind of sus, but is this the tip? Is this the peak? Or do we top out right here? But if we topped out right here, what is that? Is it like a 1 2 3 4 5? I don't know, but for now, for this scenario, in the bearish scenario, let's say we topped out here at 16. So now we put in a 1, ABC2, some kind of expanded flat. So then this also helps. So I mean, look how nice these fibs hit, right? So 1 2 3 4, and then looks like some kind of ending dag, like 1 2 3 4 5, and now this is either 1 is done, and we either finish 2, or we have like, it's just like SPY. It could do this, and then we die. And what's annoying is that we were so close to invalidate. We were so close to confirmation of this bear scenario. We were what, 500 points off. I mean, that sounds like a lot, but it's on the chart. It's like super close. But yeah, I think downside is coming / imminent in the short to immediate term, because it paints that nice head and shoulders, and that's the bear case. For now, I think we're gonna see we're gonna see around 13.8K. That's what I think is gonna happen. And if you just look at it, well, where were the signs? So the signs, I mean, this whole time, this R side has been treated as resistance / like divergence from here all the way, and then when you have your R side support break, you have a flush down, and then what's the drawdown on that? So let's say it broke here. It's like a 20% drawdown. That's insane. So now that we talked about just to recap, if bearish, we need this to confirm. We need to hit 12.4K. That would be ultimate confirmation that we're in a bear market / recession. Other technical factors that would include this, not even technical, but like the yield curve inversion, commodity prices increasing, inflation, like the war, just general recessive signals. I was also reading something how the yield curve inversion, even when it does happen, it might take a year until, and it's at the end of the total rate hikes, the interest rate hikes. That's when it fully capitulates or fully gets it going. So those are my thoughts on why it was macro bearish. Let's look at the time. Why didn't it have. So let's look at this. Let's see how it lines up. It looks kind of, yeah, that's the only negative on this, is that the wave 2 and 4, they don't correlate nicely. Maybe, yeah, they don't correlate that nice. Let's look at the bull count. All right, so bull count. Oh, whoa. Okay, now I see why. All right, so this is the bull count. It's very similar. 1 2 1 2 1 2 3 4 5 3 4 5. When you break a significant trend line like this, it's usually a wave degree completion, and we broke it. We went under the 244 DEMA, and then we're trying to back test. We didn't even make it to this level. Where did we come up short? So yeah, the 618, and this looks better for bulls because, so in Elliott waves, so this is the supposed wave 1, right? So the wave 2 retracement was 23.6%, and usually it's a guideline. It doesn't always happen, but if wave 2 and wave 4 corrections usually equal 100%. So for example, if this is 0.5, wave 4 has a higher chance of being a 50% retracement. So this is 50%. Wave 4 is usually 50% to equal 100. So now, because this is 23.6, wave 4 should be deep. So because this is shallow. So shallow wave 2, deep wave 4. And how you get your retracement is you do it from the bottom of wave 2 to the top of wave 3 to get wave 4. And it's at, we just missed 61.8. So, I mean, it looks good in terms of the guideline of the alternation between wave 2 and 4 in terms of retracement and the structure. The structures are flat, truncated C wave. And this is, I mean, God knows what this is, because I'm assuming this is the top, just for, it looks better on time. But let's say, I mean, it looks like an ABC. It looks like an ABC. Let's see. 1 2. Let's see. 1 2 3. Something like that. That's like A, B. Ah, man. 1 2 3 4 5. God. Maybe it's A B C. A B C D E. A B C D E. It's so hard because there's so much overlap, and it's hard to identify. But I mean, maybe it's, well, that was the A, so it could be here, ABC, and then 1 2 1 2, or maybe 1 2 3 4 5 A B C. Or it's like A B C W A B C X A B C Y. So yeah, that could be, this could be, yeah, I'm leaning towards this. So A B C. Yeah, I'm down. That looks fine to me. Yeah, that subdivides nicely in my book. So I'm just gonna label this as WXY for now, and wave 4 ended. So the wave 4 supposedly ended where, what happened now? What's happening? So, well, we're in a 6-hour time frame. So on the 6-hour, we can see that trend support broke. What that means is the wave degrees usually finish either the third or the fifth. I don't know which one, but let's say if wave one did finish, because I don't see significant wave two anywhere, like a subwave two. But for the sake of argument, I think if it's not topped, it'll top out right here at 15.6. But I think we're gonna likely test something like this in the near future. Yeah, that's close enough. Somewhere in this box, I think we're gonna test. Knowing the market makers, they can make it really shallow, and then just keep going, just like they did it over here. Right? They can make it shallow, and wave twos are known for being deep, but in the stock market or in the indices, it's been shallow. Or man, they might make it. I don't know. We're just gonna have to wait. I just think we're gonna test around 13.8 to 14.2K. Those are my levels. So let's say we are bullish, we bottomed, we finished wave one. Now we're working on two. Let's turn this on. Yeah, maybe something like that. The things with wave twos is that people want to enter in so quick, but you have to. If wave one takes like 34 days, then wave two should take at least 23.6% of this time. So I don't know. I would say it would even take around the same amount of time. So maybe wave two bottoms the second week of April. Just gonna have to wait and see. But yeah, if we get something like this, oh hell yeah! So if it looks like this, it's like a perfect head and shoulders. Yeah, that looks nice to me in terms of Alta is just market geometry. It's just geometry. It's just geometry, fibs, math, trends, and study of market emotion and behavior. That's all it is. All right, so that's the Nasdaq. So we covered both cases, bear and bull. What are some targets if we're bullish? If we're bullish, then new highs would be on the board. I think 17.5K, 18.3. And if you want to get very aggressive, 21 and 22. If we're bullish, I'm putting like air quotes right now. So just super like mega asterisk marks. Wave two should test around 13.8K, and the RSI would probably be around like 42. And that's SPY and the Nasdaq. One thing I want to touch on, let's look at DXY, which is the dollar index. So whenever the dollar index does good, that's bad for Bitcoin and the stock market. And because we broke out of this long-term trend, that could signify that's a wave one done. And I think eventually we will test this greater trend line, which is up here. Oh wait, what the hell? Why does it look different? All right, now I'm very. Why'd I draw this out of nowhere? It's so confusing. Yeesh, don't want to see that. Yikes. I don't, man. Yeah, now I'm confused. How did I? What the heck? Maybe like that? Sorry guys, I don't know why I had. Let me look at my Discord. Maybe it's somewhere in there. Oh, do they have more data covered or something? Okay, is my chart off? What the hell? It definitely looks different than this. Okay, well, I don't know. I don't know why it's different, but you can see it in this chart. I don't know why. Oh well. Maybe they added more data to TradingView. Shit. Well, I lost my train of thought. Alright, let me just look at it on a naked chart. This is bothering me. Plus, you guys can see. Okay, yeah. What the fuck is this? Okay, that's not a. Well, when they draw it like that, it's not a good sign. Oh, it's not a good sign that the dollar index is breaking out on multiple time frames. But what the kind of looks like that, to be honest. Interesting. Interesting. All right. This taking too much. What, 33 minutes now? Okay, anyways, so 1, 2, 3, 4, 5, 3, A, B, C, 4. Maybe it's doing A, B, C, D, E. A. No, it's not, because RSI broke. Okay. Okay. But what I think is happening, damn. What I think is happening is that this is completing a wave 1 soon. So, and then we're gonna see relief. When we get relief, that's when the market kind of like tops out, or that's when the stocks and cryptos go for a run, and we're gonna see like a deeper pullback. To here. Yeah. They'll probably make it deeper, to be honest. So like that. Yeah, I can see something like that. Okay. This is probably like either the new all-time highs. Or it's the top of their bounce, but it's, I mean, we just don't know yet. And then bang, 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 like that, something like that. And then we come up here, and then market bottoms around this area, Yeah, something like that. That's a dollar index. That's just at least how I see it. No, doesn't mean it has to happen. Let's look at the treasury note. Yeah, I already wrote my notes on this. It's so ugly. 1, 2, 3, 4. 1, 2, 1, 2. Blah 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 blah. Yeah. We'll come back to this one. I'm not sure on this analysis yet. But all I know is that if we do break out above 2.9, then it's a bear market, yo. But until then, we're fine. But yeah, also, none of this is financial advice. Please share your own risk. These are just my opinions and thoughts only. But I hope you guys enjoyed the update. It's getting late around here, so I'm gonna watch some Rick and Morty and get some sleep. Hope you guys enjoyed. Have a good time, y'all. Peace.